Ladies and gentlemen, good day and welcome to Thaai Casting Limited H2 and FY25 earnings conference call hosted by AKMIL Strategic Advisors. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance in the conference call, please signal an operator by pressing star then zero on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Ms. Shreya Girish from AKMIL Strategic Advisors. Thank you, and over to you, Ms. Girish.
Good afternoon, and thank you. On behalf of AKMIL Strategic Advisors, I welcome you over to the conference call of Thaai Casting Limited. From the management side, we have with us Mr. Anandan, Chairman and Managing Director, Ms. Shivani, the Whole-Time Director, and Mr. Ramakrishnan, the Whole-Time Director. Shivani ma'am, I hand over the call to you now.
Hi everyone. Good afternoon and thank you all for joining us today. I'm really pleased to walk you through the latest updates from Thaai Casting Limited, including an overview of our company, some recent milestones, and our financial performance for H2 FY25 and FY25. We start with briefly introducing who we are and what we stand for as a company. So, little brief about the company. Thaai Casting Limited, established in 2011, specializes in high-pressure die casting, precision machining for ferrous and non-ferrous materials. Backed up by over 30 years of industry experience, our company supplies critical components such as engine mounting brackets, transmission mounts, and steering parts to the automotive sector. Our company also offers advanced surface treatments like induction hardening and gas nitrating to enhance durability for demanding applications such as windmill gearboxes. Committed to quality, innovation, and operational efficiency, our company is expanding its infrastructure to drive growth and product diversification. As of 31st October 2024, our company holds a robust order book of 386.83 crores with an execution timeline ranging from 60 to 80 months. Recently, we secured two significant orders. One worth 126.53 crores for the supply of various automotive and non-automotive products, and another valued at approximately 12.43 for building and construction hardware. Our end customers include leading global brands such as Hyundai, Kia, Maruti Suzuki, PSA Group, Ashok Leyland, Tata Motors, Mahindra, Toyota, GEV Wind Power, Adani Wind, and JCB, etc. So, a financial snapshot. In H2 FY25, our company reported consolidated revenue of 68.75 crores with an EBITDA of 16.08 crores, and the net profit stood at 5.68 crores. In FY25, our company reported consolidated revenue of 122.21 crores with an EBITDA of 30.58 crores and a net profit of 11.05 crores. So, on concluding this, we stand as a trusted and innovative player in the precision casting and machining industry, backed by decades of experience and a strong customer base. With a growing order book, robust financial experience, and ongoing infrastructure expansion, we are well positioned for sustained growth and diversification across sectors. We thank you for your continued trust and support. I now welcome any questions you may have.
Thank you. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on your touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we'll wait for a moment while the question queue assembles. The first question comes from the line of Arun Arora with NB Investments. Please go ahead.
Good afternoon. Thanks for the opportunity. Sir, I had few questions. One is, since our business is heavily dependent on the performance of the automotive sector in India, particularly the four-wheeler segment. So now we are entering the wind sector, and also we are planning to enter LCV as you had mentioned in the earlier call. So just wanted to know, going ahead maybe 3 to 4 years down the line, will still 50 to 60% of the revenues will be contributed from the automotive industry only?
Yes, sir. Minimum 50 will be from automotive industry.
Okay, fair enough. Sir, second is the aluminium die castings, they are used in making, the bigger heavyweight products also. I think maybe due to our capacity constraints, we were making lighter components, and with the, installation of the new machines, now we can go for the heavyweight up to 10 kg or something to that also?
Now we have been ready already. We can go up to 10 kg even right now onwards. Everything installation We have made some sampling also, submitted some of the samples, something in the validation process.
Okay, fair enough. So my next question is, so the future growth potential for aluminum die casting is majorly expected to come from defense sector. So I remember you had mentioned the machines that you are getting it for the wind vertical. You had mentioned in the earlier call that they can also be used for aerospace parts also. So just wanted to know whether you would be interested in getting into defense segment or not.
So we already get registered with defense manufacturing parts, but I cannot name the customer. But within 6 months' time, we could able to register our company into as a vendor. Now the RFQ procedures are going on. We are making some of the samples for defense also. The part-name customer cannot be disclosed. Already we have vendor, but we are targeting this coming year only. But with the opportunities, we already entered in the defense.
Okay, that is good to know, sir. So, small clarification on this order book. A lot of questions have been asked in the earlier calls. Based on that, what I have understood is these orders that we have on hand, around 380 or 389 crores, so these would be executable over a period of 4 to 5 years, where part of this has already, the execution is already started. Some of them may be started in maybe, let's say, next year or so. But all these trials, die development, etc., that initial approval, everything is over. Only thing is, based on the schedule of the, from the customer, these parts or the purchase orders will be executed. Is that understanding is correct?
Your understanding is very correct, sir. Up to 25 dispatches, even up to 26 middle dispatches, all the parts validation, sample submissions, pilot batch submissions, everything is over, sir. Now we are working on 2027 launching models development.
Okay, got it, sir. Sir, my last question is, it's regarding the capacity of our die casting. See, earlier you had this 350 ton one where you could go up to 1 kg components. Now with the installation of this new 1300 ton, now where you can go up to 9 to 10 kg components, is it possible to give us what is the total metric ton that we can produce in a year?
The new machine which we installed this year, past months, this can go up to annual consumption of minimum 2,000 metric tons in addition.
Okay, what was the earlier one you could have produced, sir?
Earlier one, my capacity was around 2,500 tons. It may vary. This some rule only it is, because I may produce.
I got your point, because it depends on the weight of the components, then intricacies, so many things. So what I can take it as around 4,500 is the metric ton. Metric, correct, no?
Yes, metric ton is correct.
Okay. So the reason why I'm asking this is, these capacity that you have, how much revenue it can generate. I also know you had mentioned as you go for a higher capacity, a higher weight components, you have to go for different machining machines and all that. I understand, but only from this die casting machines, how much revenue we can generate in a year?
Mm-hmm. 220 crores present, around 210 to 220 as the present capacity can go, sir.
So if you, let us say FY27, you have the target to reach that, or no, sorry, you have the target to reach 190 during the current year. So that means you may have to go for increase in the die casting capacity also next year?
No, so die casting may not be there. It is included the other nitriding and the gear shaping process. For 2-3 months we get a gear shaping. Yeah. Gear shaping and nitriding, all inclusive, sir.
No, sir. Sir, what I was asking is not how much you are expected to do in the current year. No, I'm not asking the revenue guidance. I'm saying with this 4,500 metric ton per annum capacity of die casting, how much revenue we can generate?
This year or for entire 4,000?
No, the maximum possible. I don't know. It may take 1 year or it may take 3 years. That is different. How much it can be?
Yeah, present capacity and additionally recently something can be added. Maximum 2.2 crores can go.
How much?
240 crores.
240 crores. Okay, clear, sir. Sir, the land where we have all these facility, what is the size of this land? Is it owned by the company and how much it has been utilized, sir?
The present facility which we are setting is 2.24 acres, constructed around 70,000 square feet. It is own land of Thaai Casting.
Okay.
And we have purchased, sir? Come again?
Do you have any more space there?
No, this capacity is almost filled, sir. No space available. We have purchased one more acre nearby. That's purchased in the name of Thaai Induction and Nitrading.
How big is that, sir?
That is 1 acre plus. The nitrading process in some portion we have constructed. Nitrading processes going on, and we have purchased another 3 acres also, all near within 1 kilometer circle. 3 acres, there only the construction is happening now for the gear shaping process.
Oh, gear shaping and the
construction is going. Yeah, the construction is going
there. Okay, so there we will have more space.
That is in the name of Thaai Casting. That is in the name of Thaai Casting.
Okay, the parent company. Sir, can I ask some more questions, or is anybody else is in the line? Operator?
Yes, we have people in the line.
So you want me to continue or come back in the queue?
Mr. Arora, if you want, you can fall back in the queue. While time, I'll just promote the next in line.
No problem. Thank you very much, sir. I'll come back.
Thank you. A reminder to all the participants that you may press star and 1 to ask a question. Next question comes from the line of Chirag with Scoop Investment. Please go ahead.
Yeah. Thanks for the opportunity. Sir, I had a couple of questions. Sir, continuing from the previous one, does the peak 240 CR peak revenue include nitrading or excludes it?
No, sir. It is exclude nitrading, sir. Only casting alone capacity which we already created and recently we created.
Okay, understood. And we stand by our guidance of 195 CR revenue guidance and 20 to 27% margin for FY26.
Yes.
Okay.
170 to 180. Sir.
Okay, 170 to 180. Understood. Okay. Sir, the next question was on the funding part. So, what is the status of the fundraise that we were looking for?
So far, all the machine has been given advances with the internal accruals and that one. But because one machine which is already under sailing, which is from Austria, that machine we have taken from the supplier credit. So all other things are almost finalized with the bankers and one or two NBFCs, not yet concluded because we are negotiating on the interest terms. Maybe we have another left out of another 20-25 days only the final. So we'll be concluding the benefit institution, financial institution and complete. Mostly all the money said that.
So, are we still looking to raise funds or it is out of picture currently?
I don't know whether this is the right time to raise the funds. Originally, to raise the funds only I started this project, but unfortunately, by the time the prices were not lucrative, so I have not raised the funds. We're going as debts.
Got it. Sir, the next one was, have we started our auto plant, which was scheduled to start around March, April 2025?
Come again, sir? Auto plant?
Yeah, which was scheduled for March, April 2025.
Auto plant, huh? What is it?
Yeah. there was some plant which you were going to schedule in March or April 2025.
You mean the new plant?
Yeah.
The new plant started, sir. That is new plant. One is nitrating is started already. Another plant is under construction for the gas line.
For the old
apart from the existing land, additional 1 acre land is business is started. That is only gas nitrating. So apart from this, 1 more 3 acre construction undergoing for a gas shipping.
That's it. So what is the current utilization of that plant currently?
Currently, we are constructing for 30-35% utilization. Balance will be available for future expansion. We are thinking to go in the same segment of wind to balance land also.
So I was asking that we are at 40 to 45% utilization of the current capacity. So are we looking to ramp up it to full utilization by the March 2026?
For the land or the machine?
Or machinery?
Machinery, yes, sir. By 2026, we'll be utilizing almost maximum capacity.
100%. We are at currently 40 to 45. Am I right?
We have increased slightly, not 40 to 45. We are almost around 50-58%.
Okay, 50-55. Okay. Also, sir, on the wind facility part, which is scheduled, fund is scheduled to start from Jan 2026 onwards. So is that on track, or are there any delays on that?
No, that is on track, sir. All the machines from Europe, all are track, sir.
Okay. So all the payment part has been cleared.
No. Advance has been paid. Before shipping, we need to pay some LCs and all these things. That's what earlier I have answered. It is under final negotiation with the financial institute.
So, if you don't mind, could you share what is the cost remaining to be paid?
So, most of the machines has been paid 25 to 30%.
Okay. In absolute amount, what is
one machine is 100% paid, which is at the sailing. Some of the machine is, another machine is going to sail another 20 days time. That has to be fully paid. Rest of the machine takes another 2.5 months. So that time it will be paid before sailing.
So it would be much helpful if you could provide absolute amount in numbers like 20 crores, 30 crores is remaining to be paid. So that would be much helpful.
WFL, which is from Austria, is almost paid around 21 to 22 crores. Because euro, different dates we have paid, there are different euro prices.
Okay.
Around 4 to 4.5 crores another German machine, gas shaping machine. Another around 2 crores for another VTL machines. Another 1 crore for measuring equipment. These are the amounts so far. Slightly here and there. All are euro funds. So I am paying from past 1 year, from 90 to 98 fluctuation I am paying. I am telling approximately.
Understood. So we have remaining 30-35 CR yet to be paid.
No, more than that. More than that. Including construction, it's reaching around 100 crores.
100 crores. Okay, understood. And last, sir, what is the latest order book, sir?
Which one? Including around 520 crores. Precise 520 crores.
Understood. Thank you. I will get back in the queue, sir.
Thank you. A reminder to all the participants that you may press star and 1 to ask a question. Next question comes from the line of Praval Jain with SM Holdings. Please go ahead.
Hello. Am I audible?
Yes, sir. Good afternoon.
Yeah, good afternoon. Sir, this order book that you have, 380 crores, so I wanted to understand an approximate blended margin profile of the orders that you're doing. And your new CapEx also just went live, and one more plant will go live in, like, I think January, February, wind products, right? So, like, what kind of steady operating margins or, margins we can expect for your company as a whole catalog of all the products you have?
So EBITDA, I can commit that exactly around 22, 23 minimum can be maintained in that. Margin is again depreciation because a lot of capex is happening every year. So, and this year also a lot of capex we are bringing in for a new project. It is the same company name. So, that need to work out exactly what will be the fact.
Okay, but EBITDA, okay. And sir, one more question. So, you said that some of the payments for the machines are still left. So, would you be taking on further debt to fund it, or you want to do fundraise? I think you mentioned to some participant about the fundraise, but I was not able to get you.
No, sir. Some of the investors is discussing here, but so far not decided, taken any decision on the fundraising. That person we are going for a debt.
Okay. Got it. Chicken. Thank you. Yeah.
Thank you. A reminder to all the participants that you may press star and one to ask a question. Next question comes from the line of Hardik Gandhi with HPMG Shares and Securities Private Limited. Please go ahead.
Hello, sir. I'm audible?
Yes, sir. Yeah.
Hi, sir. So I just saw that we've significantly increased our debt already from long-term and short-term to like approximately 80 to 90 crores, right? And further, we are looking to have a capex of 100 crore, which will require significant debt. So do you think with the revenue profile and the margins we have, it will be sustainable as on a long-term basis? Because, we are taking on a lot of debt, we are expanding fast, but the order book is not moving in the similar trajectory. So just wanted your thoughts on that. What is are we doing any risk analysis on the same?
Yes, sir. We have made a external risk analysis also, and we have our consultant is also in the line. So we have analyzed it because earlier we thought of going for a fundraising. After all this analysis only, we thought of going forward for a debt raising. Because revenue, why you cannot be lucrative, because it is all service industry. The part will be supplied by the customer. Parts will be supplied by the customer. We only process. Labor charges. Otherwise, our revenue can be even around this year alone, we can go up to 400, 500 crores. We don't want to catch on the inventory side. So we have initially want to start only on the service industry. They supply the material and we do the commission.
Okay. So what will be the cost of debt right now as a percentage interest cost? What is the interest cost on debt?
Cost?
Yes, sir. So currently, on an average, it's around 10%.
10%. And after the new debt, will it still be at approx 10%, or we are taking a higher cost debt?
Yeah, we are trying to retain at 10%, to keep the average at 10%, because we are getting some cheaper, better rates also from some supplier credits to supplier credits. So it will be at 10%.
Okay. And till what time are we planning to raise debt, and what will be the ideal debt on our books going forward? Like, since 80 crores is already there, and other than that, we'll have a capex of 100 crore, plus we might require some for the working capital. So on a overall basis, do you think we'll be carrying a debt of 200 to 250 crores?
No, maximum we would be reaching around 120 to 130 crore debt. So some they already repaying. So considering all those things, maximum would be at 120 to 130 crore debt.
Yeah, but we already have 80 and we require more 100, plus there will be a working capital requirement. So given that you want to put a max debt of 120 crore, I mean, you'll be falling short of 60 to 70 crores with that calculation.
No, we have internal accruals. So two things. So one, we have internal accruals. So as we are at 120 crore of turnover, next year around 170 crore turnover with an even if I take 20% margin, so 35 crore we can generate internally itself. So we are funding through internal accruals. So rest other things we are going for a debt.
Okay. And what is the payment cycle?
Hello, sir. 170, no?
170, yes, sir. Sales sense.
Yeah.
Yeah.
I think you understand 130.
No, 130, we would be very shocked, sir. No.
Yeah.
But on the payment side, like, what is the schedule payment for the capex? Like, 100 crore is pending from our side. So will we be paying this throughout the year and by the next year, and we won't have any further capex, or it is distributed between this year and the next year?
No, the entire capex will be done will be this year.
Entire capex of 100 crore will be done this year. Okay. So we will be having like a very high depreciation going forward in the near future, given our since our revenue is at a smaller base, and although our EBITDA margins are quite good, but given our revenue is at a smaller base, we'll have a very high depreciation as well as interest cost in the going future. So don't you think it will be very heavy on our PAT margins?
Yeah, generally this is an capital intensive industry, as you know, this automotive industry. So initially in this kind of industry, initial first 5 to 7 years, there will be a huge depreciation cost. But post that, once the asset is completely depreciated, so once post that, then our profit margin will improve. Okay, yes, you know, depreciation is only a non-cash item. So better to...
Yeah, that's fine. But still, as an investor, usually people tend to neglect.
I do understand your concern.
And we have a WDV or an SLM basis?
WDV basis.
Okay, WDV method. Okay, understood. So we'll be there will be very heavy depreciation at least for the upcoming years then.
Initially, yes.
Initially, okay. And second thing, I misheard the order book. Right now we posted a 380 something odd crores order book, and sir just mentioned that our overall order book is approximately 500 and something crores. Did I mishear something?
Already 384, 386 and 126 added now, and it is 524.
Okay, 520 crores.
Last week we got an information. So last week we had a press release, 120 crore, 120 crore, yeah.
Okay, so total 520 crore order we have, out of which we'll be executing 190 crores, 170 on the safer side this year. Hello?
Yes.
Yes, sir.
And just wanting to know, this excludes our night writing process and everything, right?
All inclusive, sir.
All inclusive. Okay. So if you can just break down the revenue, peak revenue which we can have from our night riding process, because we were, I think, planning to put three night riding machines, out of which 2 are already put in, right? Is that correct?
One already continuously running. Second furnace, all the validation process is over. First trial batch is going on this week. Third also installed the completion. Now the validation process is going on in third also.
So from night riding, what kind of revenue can we expect on an annual basis?
With this 3 machine, around 12 crores.
12.
35 lakhs per furnace per month.
35 lakhs per furnace per month. Okay, and the gas lighting which we are putting up a new 3-acre plant, from that what kind of revenue are we expecting?
That is only gas shaping, that 35 to 40% land replace only we are doing. This new, that is around 40 to 45 crores initially Only service job.
Okay, 40 to 45 only service industry.
Yeah.
Okay. And our peak revenue from just the casting is 220 crores as for now, correct?
Yes, present capacity which you already invested. Yeah.
Okay. And given that further CapEx, which of 100 crores and everything, so what like of the 100 crores, how much we are putting in the casting segment?
100% we are putting only one and only for the wind segment, sir. That is only gear shape. No casting there.
Okay.
And
So
this is made
we are not.
agreement. This is made agreement with customer for 5 years volume committed, and any volume reduction also they will be compensating on the price amount. And we are also exclusiveness we are given. We cannot use this facility for others. This one advantage is all this setup in one roof in pan India level, or Thaai Casting will be the first company creating all this facility in one roof.
Okay. So just to be
Because they
more
are in
clear.
Yeah.
So just to be more clear, we'll be getting 40 to 45 crores from the gas lighting business, approximately 12 crores from the night riding business, and the remaining part will be contributed by the casting business. But we are not expanding on the casting side. It is maximum peak revenue of 220 crores, and that will remain as it is for the near future.
Yes. Without any additional capital.
We are not, right? We are not expanding there, correct?
No, sir. Existing customers, they keep giving some opportunities. So there will be expansion will come, sir. We cannot stop that. New customer will try to avoid with giving a higher price like that. And the existing customer, any request or demand coming, we will be adding here and there some capital.
And when can we expect our gas lighting to be commercial, to start?
One furnace already commercial business is happening for 6 months. Second
No,
furnace
not
mostly.
the gas lighting one, not the night riding process.
Sir, gear shaping, yeah?
Yeah.
Gear shaping will be from January 26.
Giant
Night riding also for wind only, sir. Night riding also for the wind. In additional information for the gas night riding, so last visit German, they have requested for additional 3 furnaces. We are also agreed for that. So that is also separate agreement has been made. 2026 January, we need to ready the additional 3 furnaces for gas night riding.
Oh, okay. So additional 12 crores per year. So total it will be 6 furnaces.
Yeah, it will be 6 furnaces. We have committed them from January. The additional 3 furnaces will be ready. That construction and design activities are going on. So that also we have to start now. So like this, existing customer commitments will be keep conditions.
And is the capex for that already included in the 100 crore number, or are we?
No,
is that?
That is recent development. We made an agreement also.
And what will be the capex for that roughly? The 3 furnaces?
Without building and furnace alone, it will come around 12 crores.
12 crores.
Building needs to be added. Building design added. So we have a space for that in the same place. The place already we purchased 1 acre only for an area. So we are working on the buildings. The German is coming 5th to inaugurate that place. So the groundbreaking.
And just a feedback from a stakeholder. Two things to be very careful for is given that we are consuming very high debt and we are going in that trajectory. Although our margins are good, but I would sincerely request the management to be more cautious of the debt. Given we are on the quality side, I'm damn sure that we are at a very high quality. All the products are at the top level, but at the same time, from financial risk management perspective, I would sincerely request the management to have to do their debt analysis very thoroughly, because for a company of our size, 220 crore market cap, 80 crore debt, and we are further planning it to increase. So just on those terms.
Got it, sir. Thanks, sir. We'll analyze the same, but already we are doing that. Because existing customer, that is the Splendor, you know this, they are more than 30% stake in the global. So they are a very stable customer. So when the opportunity is coming to our doorstep, so we are working hard towards completing the project itself, completing very difficult timeline. Everything we are working hard, but financially anyway, we thought of raising some funds. So we are going for debt. That also we analyzed. Because everything is not a new, if it is a new project, new development, definitely I would have not taken this. It is already existing supplier to substitute. Import substitute we are doing. Whenever we are ready for a production, the business can be happen immediately. And that is what the additional advantage is. This would have been a development process, definitely I would have not touched this. This is the only replacement from China and German. So we are taking this with all the investment.
Yeah. Just one last question. I'll just then go back in the queue. What is our revenue guidance for the next 2 to 3 years? Like, I know a lot of things are getting into place this year and the next year. So just a conservative number from your end would really help on the top line.
So around 40% will keep, sir, the year-on-year growth, because many things we are working on, sir. Because 2.5 years I am working with the Bosch Siemens. So I thought of it would have been started the business from last maybe from 8 months before. So German approvals here and there, one small development activities. So now recently we got approval. So this another 3-4 months development will be completed, then supply will get started. Like that, another 2-3 things are pending. So all the big
margin improvement,
customer base, everybody is a big customer.
Correct.
We are working closely with everything, and then this minimum we can do this, but we are trying to work hard to complete bring maximum. Up to 50% also we are trying to.
And when can we expect our PAT margins to improve going forward? Because I know the PAT margins will be under a lot of pressure for the next 2 to 3 years, given high capex, high depreciation, high interest cost, and everything.
Yes, so I just discussed with the Silva sir also, but work on the depreciation. How the PAT margin can be increased. So definitely it will be increased. 23 to 23 EBITDA I can commit, but the interest, you know very well that we are going for items, interest cost will be there, depreciation will be there.
Okay. No worries. Thank you so much. Thank you so much. I'll just get back into you. All the best, sir.
Thank you.
Thank you. Next question comes from the line of Arun Arora with NB Investments. Please go ahead.
Sir, thank you for the opportunity. Sorry for harping back on the capex. Small clarification so that we are clear on that. One is the IPO money was used to increase the die casting capacity, then machining capacity at the parent company, plus whatever the land you have taken, 3 acres. Is that understanding is correct?
Correct.
Okay. Then you said this gas nitriding. So that, whatever the 12 crores were required to commission these 3 furnaces, that was done through internal accruals.
No. The internal accrual only first furnace and then building, land purchase. The balance everything we borrowed from back.
Okay. But the rest, so whatever the additional 3 you are going to do, which again will cost you 12 crores, again some building. So that again you have to go for debt, correct?
Yeah. That also debts.
Okay. Now the third thing is this gear shaping. You said including the building construction, total capex is 100 crores. Correct?
Yeah, this is 100 is including building construction except the land. Land already we purchased. This except land,
including the land cost.
Yeah, because this building is air-conditioned building, sir, with all the machines required air conditioning.
Correct. So out of this 100 crores, you have already paid around 30 to 35 crores as an advance, right?
Yes, sir.
So that means you would require only additional 60 or 65 crores, plus what working capital anyway you don't require because they will be providing the parts. So only you would require 60 to 65 crores additional funds. Is that understanding is correct, sir?
Yeah, understand is correct. Working capital also will be required because a lot of
for this die casting. Correct.
Not much.
So that means so the working capital requirement plus another 12 crores for the gas nitriding plus the building cost for that plus another 60. So these are the total debt requirements for you.
Correct. But small correction, gas trading is not 1 crore. It will come more than 12 crores. All three furnaces.
Not 1 crore.
Okay.
1 crore. Plus building cost also you said, right? Plus building cost.
Yeah. Yes.
Sir, there's this small clarification. You had said, this gas night trading we have done on 1 acre of land and it is completely utilized. So you have to buy additional 1 acre land to put up
No, sir. Gas night trading is 1 acre land. We have utilized only less than 30%. Balance only we are going to construction.
You are correct. Okay, that is clear.
But the entire all the power connection, everything taken for 6 furnace, it is available for
Okay. But this sixth furnace, you are committed to the customer that you would do everything by January 26 also, correct?
Correct. Additional 3 furnaces.
So that means from FY27 we can expect around 24 crores of revenues from these 6 furnaces, correct?
Correct. 24 million. Correct.
So that is clear. So now, whatever we say, this total capex, all this would be completed by the end of this current financial year?
This capex, yes sir, it will be completed.
Yeah, all these capexes. So whatever other than the internal accruals, you would be going for the debt just to tide over whatever the deficit in the funds, correct? No?
Correct, sir.
Okay. So my next question is regarding the orders you have received. Not for these, one is the subsidiary, another is for the gear shaping. Now, you said this furnace, you have received order from the German customer, where you would be exclusively doing it for the entire 6 furnaces. Is that understanding is correct?
Correct.
And similarly for gear shaping also you said by investing 100 crores, we can do 40 crores of turnover, and again that is also completely committed.
Correct.
Okay. So there, out of the 3 acres you are doing, you will have some more space left to expand in future for either the gear shaping or maybe for the die casting, requirement. Correct?
Exactly.
Okay, fair enough. Sir, my next question is regarding the cash flow. I know, 23 and 24 we were cash negative, and only during the current year we could able to generate some positive cash flow. I think you said for 170 crore turnover, so you are expecting around 30 to 35 crores of cash flow. So is it fair to say that we would be cash flow positive every year from now onwards?
Sir, excuse me.
Yes, sir. So we will be cash flow positive.
But every year we would be having this cash flow positive.
Yes, sir. Yes.
Sir, my next question is, I believe promoters have given some loans to the company. Is it possible to share what is the interest rate that we would be paying there?
For the bank?
Not bank, sir. I believe as a promoter you have given some loans to the company.
Stop here, sir. Okay, 12%. Can I check and commit, sir, through mail or something?
Yes, no problem.
Silva, sir, you have any? Silva, sir?
No, sir. Currently, I don't have any numbers. Maybe we can check and come back to you, sir.
No problem, sir. No problem. Sir, next question is regarding your power requirement. I know once you have furnace and all, there will be a huge consumption of electricity. I think in the DRHP you had mentioned that we are going for 3 megawatt solar energy. Any development on that, sir?
Sir, we almost kept finalized and then ready everything. In the present, we need to pay around 20-25% margin on the 3 megawatt project. So being in this, all this coming in, recent development. So we just complete all the machine site, then we'll be going definitely for that. So because of this only, all the land I am purchasing on my own as a company name. Because rental shed we lose on the power. This shed also we are having around 2,500 kilowatt entire power facility. The new facility for 1 acre purchase. Initially itself I created the 2.5 megawatt facility I created in that land. 3 acres also I'm creating all 2.5 megawatt. Once everything is finished, then I may be going for better, maybe in long 3 megawatt. I will be increasing also once I understand better. So with that, we can save a lot of money in that. That's also one of the key objects for cash flow, because whatever I am paying electricity bill, that my EMI will be very lesser than my electricity bill.
Correct, sir. You're right. So just for idea, how much this 3 megawatt solar energy would cost us, sir?
Approx, I am telling whatever I negotiated, it will come nearly 15 crores, sir. It depends what panel and what generator you are using. Chinese means you can reduce another 1 crore.
Okay. So 15 crores, I think you should, you should be able to get the return within 3 to 4 years only.
Maximum depreciation, if you calculate, definitely that, but I don't want to calculate. 4.5 to 5 years I am calculating. With my, by paying electricity bill with a lesser amount, I am considering EMI of solar.
Okay, fair enough. Sir, my last question is regarding our raw material, where you procure different grades of aluminum ingots. So, possible to know who is our supplier? Is he an Indian company or so? And second,
all are Indian companies. All are Indian.
Okay, very nice. So, second is, so there will be a lot of fluctuation. So, are we also paying to them on a monthly basis or a quarterly basis?
Price fluctuation or price fluctuation
like
monthly basis per purchase. Purchase of raw material every monthly basis, the price fluctuation. For the customer, few customer monthly basis, maximum customers are 3 months.
Okay.
All Hyundai related people's customers 3 months basis.
Okay. Sir, another important thing I have noted is that majority of your customers are based out of Tamil Nadu. I think more than 90% you get the sales from there. Because lot of OEMs are there in the Kashi-Perambaduru belt. So maybe you are getting majority of your revenues from that area itself. But just to de-risk yourself, I know you are getting into wind and now this gear machining and all. Just wanted to know, would there be any problem in approaching west and north automotive belt?
Sir, already I am supplying to Pune.
Okay.
Big volume. Initially I started very small. I am doing good numbers now. And Gurgaon also I started. Maruti segment I entered, sir. Past 2 years, before it, 3 years I am doing. Slowly my volumes with Maruti segment also increasing. And I started entering the Nashik. Nashik also we started supplying. We thought of putting a plant in Pune also, ideally, but at present, my investment levels. But we have that much of business, Pitambur side and then Pune side. We have a vision for long term. So that much business we are getting from that area. Repeat orders I am getting. Nashik, Pune and Gurgaon, I am getting a repeat orders. 13th also I am going for a vendor meet Delhi. So I am getting a repeat orders.
Okay. So no, whatever these orders you are posting, let's say 520 crores that you have, is 90% of this is repeat orders only?
So 90% of the existing customers. Yeah, repeat orders. New customers.
520.
Yeah. Maximum 80 to 90% of the existing customer with new business.
Okay. Fair enough, sir. Thank you very much and wish you all the best, sir.
Thank you, sir. Thank you.
Yeah.
Thank you. Next question comes from the line of Sudarshan Nachimuthu, Prosperity Wealth Management. Please go ahead. Mr. Nachimuthu, please go ahead with the question. Mr. Nachimuthu, if you have...
I'm audible now?
Yes, go.
Yeah. So my question is on the gear shaping part of the business actually. So when we mentioned 45 crores of revenue, our business would come from 100 crore debt. So we'll take at least 10 crore in interest cost, then at least 10 crore in depreciation. So I'm just thinking about what would be the margin profile of this. So will it be north of 50%? Because at least at that rate, we can service the debt and interest.
That's right. So that earlier it is only a service industry, sir. No raw material involved in that turnover. Only conversion. If I involve that raw material, the revenue, that portion around, it will cost more than 300 rupees. Unnecessary inventory carrying, initially I don't want to touch that. So I'll get steady with the labor charges.
That part we understand actually. So my query is on the margin profile of the business.
Sir? Margins, maybe in person we can have a general discussion because it's a very precise customer and then part. So very, very unique component. We have worked very hard to get better margins. We keep on working what is the cutting tool time. Even today morning also we had a 4-5 hours discussion with how better fixes, how to reduce the cycle time. So easily cannot be, I'm sorry sir.
Understood, sir. And on the new casting business, does it have adequate machining capacity to accommodate the 2,000 metric ton?
Yeah. Present machining facility we have created well enough because any samples or validation process, forum violation is very important because the validation process has to be done in the same machine. So we are having enough capacity for whatever I committed. More and above we may require, and here and there we may require another 6-7 machines. Maximum.
Right, I understood. That's it from my end.
Mr. Nachimuthu, are you done with your question?
Yeah, I'll get back to the queue.
Thank you. Next question comes on the line of Kairav Sundar with Spark Capital. Please go ahead.
Hi, sir. I think my questions are answered in the line. Thanks.
Thank you.
Thank you. Next question comes on the line of Bhagwat with Prosperity Wealth Management Private Limited. Please go ahead.
Thanks for the opportunity. Could you please update on the details of the new order? Is it orders from the existing customer or new customer?
Good afternoon, sir. This Maxim is the present existing customer, sir. We have added new customers, around 7 to 8 new customers we have added, very good customers.
Okay, so this 120 crore orders is considered the existing customers.
1 second.
Yes.
New customers. New customer also is there. Existing customer is major. We have a new customer.
Okay. And what's the expected EBITDA margin from this order?
From the casting, same level of EBITDA margin for the new customer.
Okay, so this 120 crore is considering the same EBITDA margin what we have. Okay. So this 100 crore capex that we are considering now, so what's the peak revenue potential?
Which capex, sir? Gear shaping?
The 100 crore capex that we are doing for Queen.
Yeah, it's around 40 to 45 crores revenue potential.
Considering all the raw material, the peak revenue, but only the processing part.
Only service.
Okay, and when it will start contributing to the revenue?
Next year, sir.
Okay. Next year, FY27. So, considering this capex, so what's the expected revenue and EBITDA margin on a consolidated basis for FY27?
Come again, sir? Sorry.
For FY27, what's the expected revenue and EBITDA margin?
EBITDA margin will be same, sir, because equally automobile business also getting increased now.
Okay. And the revenue, what we are expecting for FY27?
Sir?
FY27? Yes. No, 27 I'm saying. Next year.
Next year, around 40% will be the increase, sir.
Sorry, I couldn't catch the numbers. Could you please repeat?
Yes, sir. Sir?
I didn't catch the number. Could you please repeat?
Around 40% will get increase in that, sir. Because we are clearly working on the new project for the target completion time and SOP time, sir.
Okay, 40% you are saying on FY26 numbers.
Yeah, correct.
Okay, so that's would be roughly around 270 to 80 crores.
Yes.
Okay. Thank you, sir.
Thank you. Next question comes from the line of Sahil Raj with Samdariya Capital Ventures. Please go ahead.
Yes, sir. Am I audible?
Yes, sir. You're audible.
Sir, most of the questions are answered. Just one small request. Are we planning to release quarterly updates going into FY26?
No, sir. Only H1 because still we are tight schedule on the financial side also because lot of expansion is going on. Selva, sir, is it possible?
No, sir. I'm not asking about complete results, but just one-page summary of what all the company did and what all the capex and everything is going on track or not. Just one-page summary.
Maybe after this H1 we can give a third and fourth. It can be possible. This way here, I don't know. Selva, sir? A lot of banking work is happening now.
So initially, it will be difficult. Maybe we'll see in Q3 whether we can start quarterly summary, one-page summary on this.
Because, sir, most of the other HME companies that are willing to actually work and with good promoter pedigree are voluntarily decreasing. Voluntarily they are releasing quarterly updates. Just not results, just one-page summary of what the company did in those 3 months and that's all. So, if a small request, if you can consider it, that's all.
Yeah, sure. Selva, sir, try to.
Yes, sir. Yes.
And sir, on the windmill thing, the wind projects that we are targeting, no revenue is expected in FY26. Is that correct?
No. This year, slightly will be there because very minimal because SOP only on January 26. Only 2 months will be there. The initial pilot batches will not be attractive number.
So from Q1 FY27 we can see some traction in that regard.
Yes.
Okay, sir. And what is the expected annual turnover that we are seeing in FY27 for the wind project? Estimates that you have.
Around 40 to 45 will be. Yeah.
45 CR, that's right?
Yes, sir.
45. All right, sir. Those are my questions. Thank you.
Thank you. Next question comes from the line of Chirag with Scope Investment. Please go ahead.
Yeah, hi sir. Thanks for the follow-up. I had just last question on the number part for FY27. So the number guidance we have in place was 270 to 280 here, and the EBITDA number seems to be around 34%. If we calculate around similar margin for auto and high margin for service business, so that would be around 34% on a combined basis for FY27. Am I right?
34% EBITDA, no, sir.
So?
Sir?
Sir, it would be around 23, between 23-25%, sir. So same level EBITDA we are expecting in future also. But on the revenue guidance, 270 seems to be too aggressive. So 170 crore when we close next year. So 40% whatever Mr. Anandan committed, it will be around 230-240 crore. It will not be 270.
Okay. So I was expecting previously we have heard that service business is higher margin compared to the normal one. So how much margin are we expecting from the service business?
Yeah, comparably it will be better than the current die casting business. But right now still we are working on the numbers. So we're not able to commit anything on the margin side at this point of time.
This is a very special project, as I told you before call also.
Understood. Thank you. Thanks, and all the best for the execution part. Thank you.
Thank you. Ladies and gentlemen, as there are no further questions, we have reached the end of question and answer session. I would now like to hand the conference over to Ms. Shriya Ganesh for closing comments.
Thank you everyone for joining the conference call of Thaai Casting Limited. If you have any queries, please get in touch with info@akmiladvisors.com. Once again, thank you all for joining the call.
Thank you. On behalf of AKMIL Strategic Advisors, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.